ICO Investing, Initial Coin Offering and Cryptocurrency Investing Explained. Written by Peter Foreman. Narrated by Josh Cates. ICO, Initial Coin Offerings. Cryptocurrency is often in the news, and one of the things that have recently been causing a stir is initial coin offerings, which are known as ICOs. In theory, it is possible to earn very large returns if you invest in ICO. But what are they? And are they safe investments? An ICO is simply a way for new cryptocurrencies to raise the initial capital that is needed to launch a new coin or token. An initial release of the currency is offered to early adopters in return for an investment made in either conventional currency or, more usually, in other cryptocurrencies. An ICO works in a very similar fashion to a crowdfunding campaign. The cryptocurrency business will usually publish full details of how the new currency is going to work, along with the details of what other currencies will be accepted as an investment in the initial release of the coin and what the time limit will be on the offering. The idea behind an ICO is no different from that of the first public offering of share that company will make. In a traditional initial public offering, IPO, a company will offer shares for sale to the public to raise capital. In both cases, a minimum total capital raised figure will be set, and if that capital is not raised within the given timescale, the offer will be withdrawn, and any funds that have been raised will be returned to the investors. Currently, ICOs are perfectly legal in most countries, although China and South Korea recently banned them because they were not being regulated under the very strict financial regulations of those countries. ICOs fall outside the regulatory framework in most other countries as well, but most people agree that it is only a matter of time before ICOs are brought under the umbrella of statutory financial regulation. In 2017, more than $1.8 billion was raised through initial coin releases and, even though there were some failures, there were many cases where both the cryptocurrency and the investors achieved their objectives. For the investors, the appeal of this type of investment is that, when the cryptocurrency begins full operation, the value of the coins or tokens will increase sharply, leading to high return on their initial investment. Like all investments, though, you need to know what you're doing if you're going to risk your money with a new cryptocurrency, particularly as ICOs are currently unregulated. That means doing your own research and finding out all the background information that you can about an offer. While returns on some cryptocurrency ICOs have been exceptionally high, it is important to remember that there is no such thing as a guaranteed get-rich-quick scheme, and there is risk involved in any type of investment, so you should only ever invest what you can afford to lose. That said, there are many investors who have enjoyed returns of many times the original sum that they invested in an ICO. However, as any successful investor in any market will tell you, the key to successful investments is not to put all your eggs in one basket and to do your background checks diligently. History of ICO Potential Profits. In 2014, the famous Ethereum was a pioneer in the space of initial coin offerings, and the team successfully raised $18 million in 42 days, making it the #1 most funded ICO in cryptocurrency. Since its inception, Ethereum has quickly grown and has become the world's second most valuable cryptocurrency ecosystem. Ethereum debuted with an ICO price of around 30 cents, and trades today are in the vicinity of $440. Precautionary measures for ICOs. Below are some vital warnings you should keep in mind with ICOs. Number 1. ICOs create new cryptos. There are already thousands of cryptos, yet there are only so many crypto users and only so much money. There can't be infinite winners. There will be losers. ICOs are a bit like IPOs for penny stocks. They are penny cryptos. It could work out well, but you're taking a gamble. Number 2. There have been some shady ICOs. Not every ICO is as upstanding as the next. It is hard to tell which is which, though. Number 3. If you make money on cryptocurrency, you have to report it as capital gains. If you make lots of money one year, then lose it the next, you'll still owe taxes on the gains. If you don't understand the tax implications, tread lightly. Learn about cryptocurrency and taxes. Number 4. If ICOs are banned after you have invested in one, you should be owed a refund, but that isn't an ideal situation. One has to imagine not everyone is going to get their money back. Number 5. Not all ICOs are meant to be investments. For example, Unicron's CEO Rahul Sood specifically said on a YouTube AMA, "Buying a token is buying a product that we're selling that can be used on the Unicron platform." People should not be looking at this as an investment. If they are looking at this as an investment, they're making a mistake. Tokens are not investments. Is that jargon to scare off those who would pump and dump Unicoin Gold? Maybe. Maybe not. Read an analysis of Unicoin Gold and make your own choice. Number 6. Assuming you're a new user who chooses the Coinbase/GDAX route, Coinbase takes time to set up. Buying Ethereum can take over a week, about 8 days, sometimes longer, with Coinbase. This means if you are new to all this, you need to start the process of obtaining Ether early. Note, GDAX is a Coinbase product. If you have Coinbase, you are only a few clicks away from having GDAX too. It is worth the time to figure out and read about. Number 7. When you sign up for an ICO or Coinbase, they will want more information from you than the average person likely feels comfortable giving. Giving that information is the only way in the door. Thus, everyone has to make a personal choice regarding what ICOs and companies they want to give their info to. This is why we have only suggested major ICOs from existing companies with existing token-based systems. Number 8. Cryptocurrency wallets aren't protected by any regulation. If you lose your wallet or keys, you lose all your coins. Number 9. Cryptocurrency is on shaky ground with regulators. At any moment, all major countries could take down cryptocurrency in any number of ways. Investing in the top coins, Bitcoin, Litecoin, and Ethereum, is risky. However, transferring money into new ICO tokens with the hope of appreciation and the further hope of transferring back to Ethereum's Ether and then to US dollars are obviously even more risky. This is the case whether you are considering KIN, called KIN, or Unicron, called Unicoin Gold. Number 10. Some ICOs are rather scammy. It can seem as though everyone and their sister started launching ICOs in 2017. There are a few currencies by major companies that could turn out to be really great investments, but investors should be very careful. There are lots of ways to go wrong here. If you pick the right ICO, as those who bought into the original Ethereum ICO did, then there is lots of upside as a reward. Number 11. Be prepared to sit on your investment for a while. You could take a big loss out of the gate, or you could see no gains for a while and then a sharp, quick spike. That sharp spike could be the start of good times, or it could be a pump and dump. Thus, not only do you have to pick the right ICO, but you also need to be ready to set a stop loss on an exchange that trades in that token to pull your money out. Number 12. Keep in mind, Ether can lose value. That can put you in an odd situation where the ICO does well, but Ethereum's Ether doesn't, and this can eat into your gains. In other words, ICOs have a tempting upside, potential gains if a coin takes off, but ICOs have significant risks related to them. Tips to pick the right ICO. ICOs are high-risk, high-reward investments. It's important to know how much one is willing to invest and possibly lose before participating in one. Understand the target market. It is important to put the company, their technology, and product or service in the context of their target market. They will inevitably be subjected to the market and regulatory pressures of their target industries, so knowing the environment should give you an idea of what challenges and opportunities these ventures face. For example, a healthcare blockchain service may bring much potential, especially now that laws are being enacted that require drug manufacturers to have modern tracking and record-keeping systems in an area where blockchain can prove useful. However, large and established players are also moving into this space, which means startups will face competition. Is the concept or technology revolutionary enough to dominate? Evaluate the technology. One can also evaluate the viability of a venture through its proof of concept. Ventures with proofs of concept and pilot case studies are often safer bets. ICOs that offer nothing more than an idea bear significant risk compared to ventures that have proofs of concept already available for evaluation and testing. These proofs of concept are also critical in showcasing that these ventures know what they're doing. Investors should also be able to test out the tech to see how it would appeal to its target users. ICOs that have functioning technology stand a better chance to progress toward commercial viability than those that still have yet to start development work. Know the people behind them. It is critical to know the nature of the company and the teams behind ICOs. Most of the companies are newly incorporated, but many founders have been around in their respective industries. It is possible to review profiles and search for news and mentions in their prior projects and efforts. Team members must display expertise in their respective roles and have proven track records and experience in the industry that they seek to disrupt. Lack of expertise can be a red flag, such as if the team doesn't have a CTO that has worked extensively on previous crypto projects. Some ICOs are also held by established companies looking for ways to expand or accelerate their efforts. For example, UK-based Bitcoin wallet service CryptoPay has been around since 2013 and has delivered innovations in the payment space by bridging legacy financial services with crypto-driven financial technology. The company still opted to hold an ICO to accelerate development of its new products and services and is currently running an ICO due to requests from its customer base. CryptoPay CEO George Bazelad said, "For us, an ICO isn't simply a matter of expansion, but rather it's an opportunity to quickly deliver brand new products based on the current demands of the market." Go for disruptive concepts. As far as the concepts behind these startups, the adage of offering unique and valuable holds. Due to the ease of holding ICOs, many startups have fallen into the Me Too trap where they only seek to be a better, cheaper, faster version of an already existing service. Unless they offer something unique, chances are these startups are just bound to compete rather than innovate. The product or service they offer must address a real need area and use revolutionary solutions. Look for concepts that truly seek to disrupt the status quo of a particular industry by leveraging the strengths of blockchain. Nitpick the white paper. A white paper serves as the company's pitch to potential investors. As such, it should be well written and substantial enough to provide compelling arguments on why people should trust the venture with their investments. Nitpicking the white paper could prove useful in revealing the details of how their solutions work and what need areas they will be addressing. The quality of the content also shows how well the team has done their homework. It is also important to pay attention to details such as the figures and citations. Citing sensationalist media instead of academic sources and subject matter experts may be a red flag as to the accuracy of the facts that are presented. For instance, ICO Coin allegedly plagiarized Tezos's white paper. Know what the coins are for. Integral to ICOs are the coins or tokens themselves. Aside from functioning as the form of security, similar to stocks in traditional investments or initial public offerings, these coins often have other functions with the platform or ecosystem. Filecoin, for example, offers a decentralized file storage solution. Users with spare computing resources can rent these out and earn Filecoin tokens in the process. These tokens can be used within the platform or be later exchanged to fiat currency or popular cryptocurrencies such as Bitcoin and Ether. Keep in mind that not all commodities, digital and real, may be ready to be tokenized and traded digitally like Bitcoin. If the market isn't ready, it will ultimately affect the venture and the value of their token. Bonus: discern your appetite for risk. As with any investment opportunity, it is important for investors to discern their appetite for risk. Unlike initial public offerings where companies usually have been around for several years, many of these startups are in very early stages and aren't even operational, which entails a lot of risk for investors. There is always a chance for investors to lose money if a venture doesn't fly. ICO figures also aren't solid indicators for the venture's viability. Some ventures that have raised significant funding are now being scrutinized for their progress or lack thereof after their ICOs. ICOs are high-risk, high-reward investments. It's important to know how much one is willing to invest and possibly lose before participating in one. Conclusion: one can always take a cue from the SEC and treat ICOs much like any investment opportunity. For companies, an ICO continues to be a viable alternative provided that the company is incorporated in a territory that allows it and that regulations are followed. For investors, an ICO is a means for them to be early stakeholders in exciting efforts. While not all cryptocurrencies are destined to become as valued as the top coins like Bitcoin and Ether, investing in the right one can lead to massive returns. The key is to perform due diligence and understand the market, the companies, and their solutions to figure out if they have the potential to succeed and provide ample returns for their investors. Factors investors consider when picking ICOs. The good news is that ICOs are hot among crypto investors. What's challenging is that investors are becoming increasingly discerning with so many ICOs to choose from. Here are some factors that can influence the success of your ICO. Core team and advisory board. Your project hasn't been completed yet, let alone getting any market traction. Investors need to feel reassured that your team has the capability and commitment to deliver on promises. They're going to look everywhere to find out more about the team, the management team, the development team, and the advisory board. They'll be Googling your names, checking all LinkedIn profiles, visiting forums, and watching any interviews. It would serve your ICO well if your team members have experience in the crypto market, in technology, and in the relevant industry. Website. This is the face of your project, and you need it to be awesome. Here are a few things to keep in mind. A killer design grabs attention. A professional layout lends credibility. Graphics explain your project better than text. Compelling copy gets visitors to take a desired action. Keep it sophisticated yet simple. Don't forget to optimize it for mobile users. White paper. Most investors will open your white paper and eyeball it. Here are a few tips. Make it attractive and detailed. Segregate the text clearly to help investors get to the parts they're most interested in. Use graphics to explain complex concepts. Use bullet lists or relevant icons to explain the process or to cite all the benefits. Your white paper must explain your project, the revenue model, the goals you seek to achieve, and how your project will scale. If you've already got some code written, showcase this. The token. Details of your token would find a place in your white paper and should on your website, but it's a separate point here because it's that important. You need to clearly spell out, what is the purpose of your token? This is by far the most important question investors would seek an answer to. Hard cap, or total token supply. Percentage of your tokens that will be held by your team or advisory board. Dates of your pre-ICO and ICO token sale. Base price. Token distribution and how it is tied to your project roadmap. Online activity. When investors Google the name of your company, they should find enough on it. Press releases and interviews help build trust. An active social media presence helps. Posting from your company's Twitter handle is just not enough. The critical team members should get out there and express their opinion on relevant threads. All your team members need to have complete LinkedIn profiles highlighting their achievements. Some companies have used messaging platforms like Slack and Telegram very successfully to create the hype. Your ICO marketing strategy must be focused on ticking checkboxes of questions that investors would want answered. Things to ask for before investing in an ICO. One of the most significant changes to the investing world to coincide with the growth of digital assets is the rise of initial coin offerings, or ICOs. An ICO enables an entity or individual to raise capital for a project or contract by selling underlying cryptocurrency tokens. However, before investing in an ICO, consider asking the below questions about the offering. 1. Is the offering a securities offering? If you are purchasing an investment, you may be buying a security. If an ICO is a securities offering, it will fall under the Securities and Exchange Commission's, SEC's, jurisdiction and enforcement. Is the offering in compliance with applicable securities laws? 2. Who are the key players in the ICO? Identify the key stakeholders' experience and track records with investing, particularly as they relate to digital assets and ICOs. 3. Do those associated with the investment have the background necessary to make it a success? Can they see the ICO through to completion? Ensure you conduct as much due diligence on the key players as you do the investment itself. 4. Are the materials well written and professional? Are the offering materials thorough and polished? Or do they appear rushed, full of grammatical and other errors, and poorly conceived? The materials should present a balanced description of potential risks and rewards, and not omit the former to further enhance the latter. While professional, fair, and balanced materials in no way legitimize an investment, they could help legitimize the party or parties behind it. 5. Does the offering include a celebrity endorsement? This is really nothing new in the investing world. However, celebrities and others are now beginning to promote ICOs as well. Such an endorsement may appear unbiased, but is, in fact, part of a paid promotion. The SEC has even warned of this in a recent public statement. 6. Do you understand the investment? This one's problematic for many, as the allure of substantial gains and new technology supersedes basic common sense. Ensure you know as much as you can about the investment, its commercial use and need, utility function, etc. Do you understand why this is better as an ICO and not another investment type? 7. Does this even need to be on a blockchain or use a new token? Once you understand the investment, you can determine whether a blockchain is the best solution for the project or contract the ICO is funding. Why does a new token have to be created? If an existing token or coin, like Ethereum, can be used just as easily, this may present a red flag. 8. Does the risk match what you're comfortable with? As with any type of investment, is the risk too much or is it acceptable? How does investing in an ICO fit your risk profile? 9. How are the digital assets held? Understand the security of the wallet holding the tokens or coins. Find out who has access to the wallet and who will have underlying custody of the assets. 10. How are the tokens or coins allotted? If new tokens or coins are created, identify their selling price and the total number in existence, including how many are being retained or given to others involved in the offering. Is a significant amount retained or given to others instead of going to the sale? Also, are contribution limits in place to prevent market manipulation? Are the key players prevented from dumping their tokens? 11. Does it sound too good to be true? Remember that very, very few investments can offer a guaranteed rate of return. Investing is inherently risky. The promise of unreasonably high returns in a relatively short amount of time is oftentimes a major red flag for investors. Several of these questions are the same, or at least similar to, questions to ask when considering any investment. While cryptocurrency and ICOs exist in a relatively new investment space, you must consider many of the same safeguards before moving forward. Keys for evaluating ICO investments. It is undeniable that ICOs are progressively becoming a lucrative way for raising startup capital. Record-breaking ICOs, such as Tezos, that raised a staggering $200 million, have demonstrated ICO's immense crowdfunding capabilities. This has made them extremely seductive, opening floodgates for startups to fund their ventures. ICO's unregulated nature has, however, attracted a lot of scam projects that has seen several heedless investors lose millions of dollars. Overstock's CEO Patrick Byrne observes the need to critically evaluate these high-risk and high-reward projects before investing. ICOs represent a great opportunity to realize high returns on investment, but come with substantial risks, even when compared to traditional venture investing. Evaluating an ICO is not an easy task. You need to invest a significant amount of time and effort to get a grasp of the project's aim, how it solves an existing problem, and its future growth potential. Too many companies offering an ICO seem to have unrealistic offerings that are too good to be true. Ultimately, it is best to invest in an ICO that will solve issues of the society as we know it today. That said, how do you ensure you pick the right project and avoid ending up with a bunch of worthless tokens? Here is a list of what you need to do before investing in an ICO. Read the white paper carefully and in full. This should always be your priority. White papers contain most information about a company's vision, its services, developers, and so forth. Pay special attention to the strong and negative aspects. You'll also need to carry out your due diligence to ascertain the facts listed therein. Research is vital for ensuring you don't venture into uncharted waters. Don't get caught up in the cryptomania. Do your research and ask the tough questions. Make them earn your trust and investment. Fact-checking is vital for ensuring that information about the current state of the market is not exaggerated. Find out who makes up the team. Find as much information as possible about the team, especially the development team and advisory board. Visit their LinkedIn profiles and see if the team has any relevant experience. How did their past projects turn out? Michael Collins believes that team competence has a direct impact on the project outcome. Find out who is on the team, their background, and their core competencies. There are so many projects out there that the members of a team have zero experience or expertise in the industry they are trying to go into. While expressing similar views, Graham Moore, CMO of Polymath, says that a team's solid reputation is a go-ahead signal. Does this team have a solid reputation, experience in the space, and the technical abilities to pull off what they're proposing? Graham warns that lack of experience is an obvious red flag. There are far too many projects right now with teams that have no reputation that likely cannot execute on their vision. A team's track record is also an important consideration for a successful investing. When investing in an ICO, look for founding teams with prior tech success or ICOs with some form of an existing product. If no product exists and the team is inexperienced in the tech community, be very selective, says Clarence Wooten, CEO Steamroll. Also, if a startup hasn't listed their team for whatever reason, run away with your money. Determine the market potential. A good ICO project is one whose market is bullish on the long term. The product is the most important aspect of the investment proposition. Will users adopt it? And is the solution technically and feasible and scalable? According to the founder and CEO of Thought Blockchain, Andrew J. Hacker, the size and status of the addressable market should never be overlooked. Andrew, who doubles up as a cybersecurity expert in residence at Harrisburg University, adds that ICOs with strong value propositions and unique selling points are preferable. Consider what others think. ICOs often market themselves on various cryptocurrency forums as well as social media platforms such as Facebook, Reddit, Twitter, and Instagram. Check out ICO's presentations on these platforms and keenly read through people's responses. Take other people's perspective along with their advice, even if they contradict your own. Make sure the team is approachable and able to respond to questions accordingly. If the team can't communicate well with their community, or it seems less transparent in their dealings, you need to be wary of them. Watch out for bounty posts where users spread positive information for rewards. ICOs will get even more mainstream as a method of raising funds in the near future. In-depth scrutiny should always precede any investment decision. remember to hold on to your money even with the slightest suspicion. Watch their announcement on various forums. You must always keep an eye on their first announcement on various channels about their ICO. You will mostly find such announcements on Bitcoin Talk Forum, where a huge project thread will follow. Try to read and gauge the sentiments of people in the thread, and also note the behavior of the representative team member taking care of the thread. Use that self-made case study and ask relevant questions on the forum. Also, see how different people and the team moderator of the project are reacting to those questions. Are they proactive and interested? Are they dodging your questions? Have they banned you from asking questions? If you are banned, congratulations! You have just saved yourself from a scam ICO. If not, continue the interaction. Following these exercises, you will understand more about their project and will also clear your doubts. Follow that particular field's experts related to ICO. Also, follow expert people in the same field. By same field, it means blockchain and the field in which the tech of blockchain is being applied. For example, let's suppose the ICO project is trying to solve some problem of supply chain management for seaports. In such a scenario, you should find an expert who has some knowledge of blockchain too. You should follow such people to get their insights on the application part, which will also enable you to judge if it really makes sense in applying this tech to that particular niche. Understand their coin distribution matrix and total supply. Lastly, understand the project's token economics. Huge coin supplies and huge pre-mine projects are usually questionable. However, you can dive deep to understand and analyze further. But if their token supply is gargantuan and there is no market model around it to really help it thrive, you should definitely think twice before investing in it. Also, if their massive token supply is continuously inflating at a huge rate, go against it. You should also check whether the coin supply is fixed. Understanding the sharing ratio and finding out where the control for the rest of the funds lies is also very important. Questions like whether or not they are escrowed or secured in a multi-sig tech should also be fired at the real project owners to get more clarity. Conclusion: investing in ICOs. ICO scams are only increasing, and the nature of these scams is also evolving. Hence, it is highly recommended that one should not invest until one is sure. Not just that, one should also not invest more than what they are ready to lose. Process of investing in ICO. The process of investing in an ICO boils down to this. You send some Ether to an address, and after the ICO is done, you get tokens in an amount proportionate to the amount of Ether you've sent. A typical ICO. Again, every ICO is different. Read the terms and conditions very carefully. Will look as follows. 1. Register for the ICO through the project's website. Some ICOs don't require any registration. This is a red flag, although it's still possible that it's a legitimate project. Sometimes this will involve sending scans of your passport or a similar document. If you're not comfortable with this, stay away. In some cases, you will be asked to provide an address to which you want to receive the ICO tokens. Make sure you send a parity/MEW Ethereum address that you have access to. 2. When the ICO starts, send some Ether to the address provided on the ICO website. The ICO's website will typically have a counter and a clearly designated date and time when you can send funds. Do not send your Ether before that time or after the ICO ends. Many ICOs are capped to a certain amount, like 10 Ethereum per person. Do not send more than your personal cap. Make sure you set the right gas price and gas limit. Gas is the extra Ether you have to pay for an Ethereum transaction to go through. These are typically laid out on the project's website. 3. Per the ICO terms, you get tokens to your address. This might take a while. Sometimes the tokens will be sent immediately. Sometimes it can take weeks, months, or even longer. When you receive the tokens, they may not be immediately tradable. This depends on the smart contract within the token. These details were probably laid out on the project's website. Sometimes things will go wrong, or appear to have gone wrong. Don't freak out if you haven't immediately received your tokens. During a busy ICO, these things can get delayed, and deadlines can move a bit. Consult with other investors on the internet and other social channels. How to invest safely and easily. ICO Platform Solution. ICO platforms have emerged to offer instant, safe, and easy-to-use solutions, as they allow not only safe platforms where the hacker threat is minimized, but they also offer the ability to manage multiple wallets with the tokens they contain in one single place. If you're looking for the top ICO platforms available out there, look no further because that's what we're going to see next. Blockstarter. Blockstarter is a blockchain-based crowdfunding platform for launching ICO campaigns. It helps users carry out a crowd sale campaign from A to Z, create smart contracts, generate an ERC20 compatible token, engage with investors and bounty hunters, raise funds, and even find professional team members for your project. All this with zero actual coding. The advanced UI will allow any entrepreneur with a basic grasp of modern technology to launch a crowd sale. It features a user-friendly interface, numerous options like customized smart contracts written automatically for specific purposes of a project, and an API for third-party websites that would empower a campaign, among several other options. While that all seems quite promising, one of the most important features proposed in this solution is the utter reliability of the entire ecosystem. More importantly, such a solution could become the first step in developing a trustworthy standard for crowdsourcing campaigns that the industry desperately needs. Such standards could cut out all scam projects, let more interesting projects in, and eventually become the link between traditional industries and the crypto industry. Benefits of Blockstarter. Blockstarter has built an Ethereum-like powerhouse where ICOs can be created, marketed, and funded with ease. Smart contracts are generated easily. Non-tech-savvy dashboard and panel. Drawbacks of Blockstarter. Wide availability of similar projects for launching ICOs such as Kick ICO. Cryptonomos. Cryptonomos is an innovative platform for conducting token launches and servicing tokens. Either through their website or mobile app, Cryptonomos makes it easy to buy and sell tokens of ongoing token launches. As soon as you set up your Cryptonomos account, you can transfer funds directly from your bank or any external cryptocurrency wallet and start browsing for ongoing token launches. Safe and secure with two-factor authentication, your cryptocurrency and your tokens are well protected. The mobile app is easy to navigate and gives you mobile access to exciting new opportunities. On the Cryptonomos platform, every transaction is recorded, and you have access to detailed transaction histories through which you can keep track of your earnings, token price increases, etc. The dashboard also contains a clear and easy-to-use referral program section that lets you earn rewards for bringing in new token holders. Benefits of Cryptonomos. The ICO services available from Cryptonomos span the entire process of the crowd sale. Before the ICO begins, it can help with legal analysis, the ICO website design, token economics, and more. It assists with technology such as securely collecting funds, developing tokens, and creating a secure user wallet. Cryptonomos also offers additional services such as early backer engagement, PR, escrow, and community channel management. Drawbacks of Cryptonomos. Cryptonomos is still developing as an ICO platform, so until it becomes widely adopted by businesses, users and businesses alike should use it cautiously and not rely entirely on the platform for their organization. Kick ICO. Kick ICO is an online blockchain-based crowdfunding platform that allows its users, project authors, advisors, translators, and announcers, to collect funds through the blockchain-based tools offered by the platform, as well as smart contracts. The problem that Kick ICO strives to solve is the rash of fraudulent ICOs that have arisen as a result of successful ones. Kick ICO combines two industries, blockchain and crowdfunding. Instead of centralized platforms like Kickstarter or Indiegogo, Kick ICO gives people the right to choose and protect their smart contracts. The Kick ICO platform supports three kinds of fundraising campaigns: ICO, crowd investing, and crowdfunding. No other platform can boast that same level of flexibility and freedom of choice. Benefits of Kick ICO. Kick ICO aims to change the way companies launch crowdfunding campaigns and how investors participate in them. Here are some of the proposed benefits according to the Kick ICO white paper. Allows for the creation of a marketplace within a platform, motivates project authors to be successful on the platform, motivates participants to be active, and protects investors from defaults. Drawbacks of Kick ICO. Kick ICO is suited only to smaller-scale fundraising projects. It seems like the biggest advantage Kick ICO has over the major players is the fees. However, Kick ICO is not necessarily cheaper than current solutions. For example, Indiegogo charges 4%, same as Kick ICO, when a crowdfunding goal is met. Beginner's Guide to Invest in an ICO. If you're new to the crypto space, and especially to ICOs, the process of participating in an ICO might seem a bit intimidating. To help you get started with this process, here are the steps you need to take to invest in an ICO. While not the only option for ICOs, Ethereum's blockchain has become the most used to create unique cryptocurrency tokens and run token sales. To make things simpler and avoid confusion, the steps detailed below are based on ICOs running on this platform and accepting contributions in Ether, Ethereum's native token. Remember, as Warren Buffett says, risk comes from not knowing what you're doing. Create an Ethereum wallet. The first step is to create a wallet which will store the Ether that you will use to take part of the ICO. Later, this wallet will let you store the project's tokens. Many wallets exist for this purpose, so the one you will use is a matter of preference. One of the most widely used and recommended wallets is MyEtherWallet. Using MyEtherWallet will give you total control of your wallet, including your private keys. This is very important as it means that you are in full control of your funds. This will, however, also mean you will be in charge of the security and protection of these funds. Get some Ether. Most ICOs take Ether as contributions, so you will naturally need to own some to be able to participate. Now that you have your wallet in place, it's time to acquire an amount of Ether equal to the amount you will be investing in the ICO. How this is done will depend on the country in which you live. Coinbase is one of the most popular and easy-to-use platforms that provide its services to 32 countries. Coinbase allows you to buy both Bitcoin and Ether. If you're in a country that is not currently supported by Coinbase, other options exist, although they can be a bit trickier. One of the easiest ways to buy Bitcoin and later trade it for Ether is on an exchange such as Bittrex or using a service like Shapeshift. Peer-to-peer networks like Local Bitcoins is also an option. Move your Ether to the wallet you created. This is an important step. You cannot participate in an ICO from the exchange you use to buy Bitcoin or Ether. The reason for this is that these are centralized services, Coinbase, Bittrex, etc., and they are in control of the private keys to your addresses. Any funds you send to the ICO public address from an exchange will probably get lost, and you won't receive your tokens. Send your Ether to the ICO address. By now, you should have all the necessary elements set up. Now the real action begins. First of all, look at the project's website. Make sure you are looking at the official channel of communication of the project you are investing. They usually have a button, tab, or a call to action mentioning their token sale and an invitation to participate. Once you find this, you will have to register for the ICO to get whitelisted as an investor. The information requested from you will vary. At a minimum, they will ask for your public wallet address and email, but more serious ICOs will also seek to comply with KYC and AML laws and may ask you for your personal information and identity. After registering for the ICO, you should begin receiving detailed instructions and the public address of where you will have to send your Ether once the ICO goes live. After you get all this information, you are ready to contribute and receive your tokens. All you need to do is wait for the crowdfunding to open. After sending your Ether to the project's public address, the proportionate number of tokens will get sent to your Ethereum wallet. Store your tokens safely, and wait. If your selected project doesn't have a working prototype that enables you to use your tokens immediately, there's not much to do now. You are in for the long run, which means you should find a secure way to store your tokens. Selling, trading your tokens. When the time comes, you might want to sell your tokens either for profit or because you need the money. The main thing you need to decide is if you're going to turn those tokens back into US dollars or exchange them for some other cryptocurrency. Changing cryptocurrencies other than Bitcoin or Ether back to US dollars can be quite tricky at this time, so you will probably have to go through these cryptocurrencies if you want an exit from the market. One of the things you will need to look at is if the project's token you invested in has been listed on any exchange. Some exchanges are more difficult to get listed on than others, so not every token will be immediately available everywhere. CoinMarketCap shows all the exchanges where tokens are traded. Final thoughts. Don't invest in technologies or products you don't understand, and know that there is a real possibility of losing all of your investment. When looking at the ICO, focus more on the project rather than the short-term gains you think you can make. It's also important to trust your research and shut out the hype. There are a lot of people out there looking to influence the market by spreading positive and negative feedback. Finally, don't be afraid to get involved. It's possible to become an active investor in the crypto space even if you have relatively little experience. Behind all of the buzz and sensationalist press articles, new and disruptive developments are taking place, some of which will change the world. ICO investment strategies. There are a couple of ICO investment strategies that investors make use of in order to profit from the launching of new cryptocurrencies. These are primarily flipping and holding, which are two opposing methods with their usage depending on the ICO in question. Below is the details about these ICO investment strategies, as well as when you might want to flip or hold tokens. Flipping. This strategy involves buying tokens during an ICO and then selling them within a short time of being listed on an exchange, the idea being to make fast profits and exit. When assessing whether a coin might have good flipping potential, there are a couple of key points to look out for. Market cap. If the ICO has a high market cap, it could mean that most of the demand for the token will be met with the ICO. This leaves less room for it to appreciate, meaning flipping might not be the best strategy. You should remember that the market cap size is relative, so compare it to existing projects in the same niche. Hype. Another important factor that works with market cap. For example, if a project has a low market cap and a lot of hype, there might be unmet demand. In this case, you may consider waiting a bit longer after the coin is listed on an exchange before selling, as the price could be set to rise to meet demand. A good way to assess hype is by using social cues like Telegram members, Reddit subscribers, YouTube subscribers, etc. CoinGecko have a great comparison table. Lockup period. This is how long the tokens will be locked up for before being distributed. Generally, tokens with a longer lockup period are less suitable for flipping because the crypto world moves fast and hype can fizzle out. When they are eventually listed on an exchange, there is limited demand and the price can fall. Holding. To contrast, holding is a strategy used when you think the token could be worth a significant amount more several months or years down the line. When trying to make a decision about whether to invest long-term, researching is the most important element. Here are some key areas to look into. Researching the business model. Check out their website, white paper, and development roadmap to see how far along the project is. If it has nothing but a white paper and a flashy website, it is likely a lot riskier than a company with a working product. Check out the niche they target. What is the competition like? How big is the market? Does decentralization actually make business sense for the market? Does the project solve a real-world problem? The community. A strong community means better adoption and also development by committed people. Head over to the Reddit, Slack, Discord, etc., and see how active the community is. Also ask any questions you have. Token value. How will the token appreciate or provide value over time? Does it have utility within the platform? For example, if a token is used for transactions, then this should drive demand and increase the price. Other types of token might reward holders with interest. The team. You might have the best tech in the world, but without a good team to execute, then the project will likely fail. Research the team thoroughly by Googling each of the members and looking at LinkedIn profiles, etc. Total supply and inflation. What is the total amount of tokens that will be released, and is there any inflation? This is highly important for long-term holding because it will dilute the value of your investment over time. A different approach. In some ways, flipping can be higher risk than holding because it can be difficult to gauge factors like demand and hype. Additionally, in some situations, as soon as the tokens hit the market, they get dumped, leading to a price crash. This is usually due to whales, investors who hold a significant amount of tokens, manipulating the markets as they often buy back post-crash. Some tokens will recover relatively quickly, whereas others might stagnate for a long time. Equally, holding a token long-term can be risky due to unforeseen circumstances and future volatility. It is pretty much impossible to predict what new regulations might come in or future hacks that could cause the markets to crash. There is also the possibility that superior tech renders a token obsolete in the future. Thus, whilst sometimes it might be obvious whether you should flip or hold, a lot of the time the lines are blurred, and the best approach might be a combination of the two. For example, if you decide to hold, you might consider taking some profits by flipping a certain percentage of your tokens, usually to cover the cost of your initial investment. With this alternative ICO investment strategy, you will avoid regret if the project fails to gain traction. Whatever strategy you ultimately decide upon, researching the ICO thoroughly is the key to successfully investing. Afterword. Thanks again for buying my book. If you have a minute, please leave a review. I take reviews seriously and always look at them. This way, you are helping me provide you better content that you will love in the future. A review doesn't have to be long, just 1 or 2 sentences and a number of stars you find appropriate. Hopefully 5, of course. Also, if I think your review is useful, I'll mark it as helpful. This will help you become more known on Amazon as a decent reviewer, and will ensure that more authors will contact you with free ebooks in the future. This is how we can help each other out. Take a look at these books, too. Blockchain, 4-in-1 Bundle by Charles Jensen. Ripplecoin, XRP and Cryptocurrency In-Depth Analysis by Giles Reeves. Ethereum, Programming and Mining to Better Investments by Giles Reeves. Bitcoin Trading by Giles Reeves. Bitcoin Tools by Giles Reeves. Bitcoin Millionaire by Giles Reeves. This has been ICO Investing, Initial Coin Offering and Cryptocurrency Investing Explained, written by Peter Foreman, narrated by Josh Cates. Copyright 2018 by Vincent Newt. Production copyright 2018 by Vincent Newt.